inheritance tax, obviously we grew up in this country, we all know about it. It's not every country has inheritance tax. It's something that we choose to implement in this country. Yeah. But many countries just don't have it.
Yeah, I mean, of all the money the government gives out in this country, because I always wonder where they get it all from, and there's just so many different incomes they have. That's one of their incomes, right? Yeah. Crazy, you know.
Yeah, I think there's I can't remember what the number is now, but there's a lot of taxes out there. Yeah.
Okay. So how, as a self-employed person or business owner, like just 1 or 2 tips on trying to pay less tax as a self-employed person or business, what would you do? What steps would you take?
Probably, it's a question for an accountant who can run through all the different tax deductible expenses that you can make as a business. But as a financial planner, I have some clients who are business owners, and for me, it's always about getting them to max out their pension contributions. Okay. Because a pension contribution is an allowable expense from corporation tax.
What's the maximum they can put into a pension?
Well, you can put £60,000 a year into a pension. Okay. So there's an annual allowance, which is quite generous. There's potential to put more in if you've got unused allowances from the previous 3 tax years as well. Okay. So, I've had some clients and we've put in, over £100,000 into a pension in one go. In fact, I'm doing that right now for a client who owns a limited company. So similar scenarios I'm about to explain. If you've got cash in the business, and you've not been able to spend it efficiently, you haven't been able to spend it on deductible expenses that don't incur corporation tax, and you've just got, you've had a good year, you're profitable, you've got £50,000 in the business in cash. You want to make sure you've got a working float, just make sure that, suppliers or costs or whatever are covered for a few months in case there's no income, just to manage cash flow. But everything above that, you want to try and do something with. So in that example, let's say that float was £10,000. You got potentially £40,000 there that would be incurring at the very least 19% corporation tax. So that's not it's a good few £1,000s. Yeah. If you were going to pay yourself that money, then if you're paying it as a salary, then you've got income tax, national insurance to worry about. Yes. If you're paying it as a dividend, then you've got dividend tax and corporation tax, because a dividend is not an allowable expense. Yeah. So if you are a high rate taxpayer, you've paid yourself as a salary, most accountants will set up a self-employed person's salary at the personal allowance, pay themselves £12,570 a year as salary at 0%, and then dividends up to the high rate tax threshold, because the dividend rate's 8.75%. So much lower than an income tax rate of 20%, but you do pay the corporation tax at 19%. So either way, there's a couple of taxes. Yeah. The only way to avoid all of these taxes is to put it into your pension. It's an allowable expense. So instead of that £40,000 being paid to you, and you've paid potentially over 33% in dividend tax and 19% corporation tax, before you know it, you've got less than half of the money that you've taken out, and HMRC's taken the rest. Yeah. Use your pension. You can put that £40,000 directly into your pension, no corporation tax, no income tax, and it's in a tax-free growth environment, and it's yours for the future.
And then obviously you just pay yourself the 12,575.
Yeah, which you'd have been paying as you go anyway. That's that. When you're self-employed, you draw what you need as you go month to month. Yeah, it's the money above and beyond that if you've got more left over. I would always encourage my clients to pay regularly into their pension to make sure that they're doing it and not just looking at doing it once a year. But excess cash in a business on profits, pensions are a brilliant way to get money out of your business.
Sound advice. Amazing. I'm sure a lot of people would enjoy that one.
Yeah, I hope so.
Okay. So do you think the UK is a good place to live as a high income earner?
That's a good question. I love the UK. I think the UK is a great place to live generally. Yeah. I do. So it depends on what you want from life. If you're all about maximizing tax efficiencies and income, you can do better in the Middle East or Portugal or America. But there's so many factors to where you live and where you want to live. It might be family, it might be friends, might be lifestyle. So yeah, it's a really difficult one to answer, but yeah, just based on taxes and income potential, earning potential, then there's no secret. There's lots of people that are leaving the UK at the moment and moving to Dubai and places like that.
And that's still having their business in the UK, making UK money. It still works, yeah?
I don't really know how that works, if I'm honest. Now, all of these different territories have got different tax agreements with the UK, and you need to speak to an international tax advisor to understand exactly what that might mean for you, depending on where you're going to be living, because tax earned in different countries could potentially be not taxed from your country of residence, but it potentially could, depending on where you are. Okay. So, if you're thinking of moving anywhere, just make sure you do your research on that one, and go find a tax advisor who specializes in that territory.
Okay. So, if you're a tax advisor as well, I'd love to have you on the show. Let's talk about it.
Yeah, I mean, look, there's no shortage of people thinking about it.
Yeah.
Moving abroad.
I mean, a lot of people are moving to Dubai lately as well. I mean,
loads.
Lifestyle's good over there as well.
Yeah, I've got some friends who are doing it or have done it.
Is that something you could do for your business as well? I mean, is your business quite remote, would you say?
I don't see myself ever doing that.
Okay.
I think lifestyle-wise, me and my partner would we'd be up for it.
Yeah.
She only said to me the other day, she said, if you said to me that you wanted to do that, then I would come with you. But I would find it very hard to run my business from over there unless I was sort of had someone that was here still managing the business, and I was starting again over there. I could, talk to somebody who was managing my business here. Yeah. Of course you could, and it could be possible.
It sounds like a good opportunity for you.
You could make it work. I just don't know if I'd want to.
Okay.
Yeah, I like being here. I feel a bit of loyalty to my clients who are here, and I just don't like the idea of up and moving to another country. And it would I haven't figured out a way where that would not affect the service I give to my clients.
Okay.
If I could figure that out, then potentially it would be something that we might do in the future. But I've got no plans to do it at the moment.